China economist at JPMorgan Chase. She joins us from Hong Kong this morning. Qian, good morning. So what's the answer here? Are Chinese banks ready to hike rates?
I think the policymakers are indeed concerned about the impact of excess liquidity on inflation economy. So that's why they hiked the reserve requirement ratio hike early this year, and that really signaled the start of monetary normalization process. We do look for further reserve requirement ratio hikes and interest rate hikes this year. But on the other hand, we think that the policymaker may wait a bit in terms of the interest rate hike. First, I know that the market participants are really concerned about near-term interest rate hike because of the December CPI data, which come in stronger than market expected. But I think there's several temporary factors that's boosting up the food prices, such as the snowstorms, the colder than Euro winter. So there's no need to panic on 1 month's inflation data. And we also think the central bank want to wait a bit to get a clear picture of the inflation. At the same time, unlike the reserve requirement ratio hike, which is mainly targeting on speeding up, absorbing the excess liquidity, interest rate hike will have a much broader impact on various sectors of the economy, and many of which are not seen to be on a solid track of recovery. In fact, policymakers in Beijing are still quite concerned about double dip in the global economy, especially if you look at what's happening in Japan and Europe recently, and also the Greek funding crisis. So our baseline scenario is that they may want to wait until early second quarter to hike the interest rate. The National People Congress in March will be the key event to watch. Maybe there will be some change in the policy tone that we may need to shift towards a neutral stance of monetary policy. Yeah, but that's definitely the thing to watch.
In all, you're looking for 3 rate hikes this year alone. How aggressive will China be?
No, I don't think that's aggressive. I would characterize that as steady monetary normalization process. Even with 3 interest rate hikes by the end of this year, that will still leave the monetary conditions quite accommodative by the end of this year. In fact, I think the scope for further interest rate hikes will be limited because if you look at the U.S. Fed, they are in no hurry to hike. Widening the interest rate gap between China and the U.S. will definitely attract more hot money into China, and that increased appreciation pressure for CNY.
Despite all the talk about asset bubble, we heard what World Bank's Hans Timmer, who was in Singapore last week, saying. He said that the asset bubble risk in China is not big. Your take on that?
I think, yes, a large part of excess liquidity has flowed into the asset market last year, especially the property market. Property prices rising significantly. I think property prices will be relatively stable this year, especially in facing all of the policy uncertainty. But I think if you look at the property market in China, it has very strong fundamental support, especially if you consider the urbanization process. We have 1% population that will become, become urbanized every year. So that's very strong support for the medium-term trend in the property market. At the same time, I think if you look at the banking sector, in general, banks has maintained a strict mortgage rule, in general 30% down payment. So I think that leaves the risk for the banking sector also relatively low.
Wang Qian, JPMorgan Chase, thank you so much for being with us this morning.